Yo, what is good, High TF mob? It is your boy Poopa back with another video. And today I got a little bit of good news. I got a little bit of bad news. But either way, I'm gonna start with the bad news first. Uh 1 second, let me log into this Oana so I can get the charts up for you guys. Should have had this ready, but basically the bad news is that although I passed my test last week, um, Osprey, for some reason, Osprey is the broker that I use to do the funding challenge. And I followed all their requirements, I followed their guidelines, passed the test like any other firm. And what ended up happening was after passing, apparently they did a third phase where they review how you passed the entire test. So in my head, I was just thrown off because I was like, why is there even a third phase and why is it not brought up? Because generally there's two phases after you pass. They'll send you an email like this, basically saying that you've passed. Mind you, I didn't know I was going to get my refund and $1,000 bonus. So that was nice because I did get paid that. That was on the side of the good news. But normally they send you this, and once you get this, like you're good. You have your account, you're good to go. They fund you, and then basically you lose it, it's on you. And if you go on to make money, you make money. That's just what it is. But they, for some reason, had a third review phase, which ultimately led to them saying that they were going to deny me my test. So I was super confused. I'm like, how are you going to deny someone a test when you've already placed the guidelines for somebody to go through to pass a test to get the funded account? It doesn't make sense how there's extra guidelines. So they basically went on to try to justify what they were saying by saying this. Thank you for participating in our funded trader challenge and completing the verification phase. In line with the terms and conditions of our challenge, our experts have carefully analyzed your trading history and characteristics of your performance whilst trading to determine if we'd like to proceed with rewarding you with a fully funded trading account. Based on our analysis, we regret to inform you that although you have successfully reached the profit target set for the challenge, Osprey FX is looking for a more consistent level of trading to move forward with giving access to a funded trading account. An example of this is a high percentage of profit was made during just 1 or 2 days of trading, with position sizes that were much larger than during other trading days that made up your minimum trading day requirement. For more information and guidance on which points are considered when evaluating your performance whilst participating in the challenge, please click here. With this in mind, we would select to reward your efforts for successfully completing the verification phase of our funded trail challenge by issuing a full refund of the amount that I put down upon entry and the bonus, right? And mind you, see the bonus, they only put 250. So they started paying me out the 250 and stopped there. And I was super confused. I'm like, okay, first off, it's not even the full bonus you guys were talking about. So that's one error. Second error is that I can't over leverage on my account. Okay. So on the channel, you guys see how I place my trades on a week-to-week basis. And I was basically trying to explain to them that I use a trade calculator. So there's no possible way that I could, in essence, over leverage an account because I'm not choosing the lot sizes. So basically, I rebuttal with that. I say, so just to clarify, I trade 1% risk with every trade, no matter the lot size. So I don't understand how I could over leverage when I use a trade calculator, respect the trade rules. Also, just wondering, do I still get the 1,000 bonus and login? I'm confused about there being a third verification when it was never mentioned prior to getting involved with the test. That would be great for traders to know. And I only took the positions I did in the same week to finish the test so I can actually begin to fully focus on the funded account at the proper pace. Trading is not difficult, especially when I see opportunities every week. And if you guys truly want to see how I went about the test, you can evaluate it via my YouTube channel because I track all my positions taken on a week-to-week basis. So I sent them the link to my channel to see it if they really were quote unquote evaluating. But honestly, it just seemed to me they just didn't want to give me the account because of some subtle behaviors of high leveraging, right? So here they say, thank you for applying your query. They're going to move it forward. They moved it forward. They got back to me. They say, we can see that a few of our guidelines have been breached, the main ones being lot size consistency, as well as the maximum daily profit. So I pull up the site, check their guidelines or whatever, right? And this is the stage one. I got that done, showed you guys all that. Stage two, did that and got past all that. Then this was quote unquote the third, which is where their experts will consider the following points when looking at my account. So the daily loss slash drawdown is calculated by the current equity slash the previous equity and the previous equity times 100. Now, I don't understand all this equation here. It says daily loss to the drawdown is calculated. So let's see, current equity, previous equity divided by the previous equity times 100, which is weird. A maximum of 20 to 30% of your overall profit to be earned in a single trading day. Reasonable trade size in relation to capital. This is reviewed across several factors such as assets, traded time of day, and week, together with other factors affecting the market condition. When trades are scaled, position sizes before and during major news events and or market closure, consistency in position sizes whilst trading, the use and adjustment of stops and limits. Following the evaluation, our experts will decide if trading strategy implemented suits our risk appetite. This will result in either being granted or denied a funding trading account or being offered a pass to our stage 2 verification to further assess your trading strategy. So it even sounds like they're going to throw me in another verification process, which is super weird to me because, again, you can't really be promising passing these 2 stages and then now there's a whole extra phase. But it is what it is. That's neither here nor there. FTMO is another website that is a funded firm, and they do not do this to you. They will have you get your test right after you pass the second one. The only difference between this broker and them, FTMO, which would be this site here, the main difference between this and the Osprey is that these guys pay you every month versus these guys here on Osprey pay you every single week. So that's why I was very antsy to get this done. Now, their argument was that, again, I use high leverage during news event, and my position lot sizes weren't consistent throughout trading. Now, granted, yes, the lot sizes fluctuate a lot. The reason why I had to tell them, I was like, I use a calculator. So I sent them proof. Okay, and let's pull that up. So I sent them proof about it, and let's see. So I told them, I said, I didn't receive the full bonus. There's still 750 left. And I can't breach the lot size rule when I don't choose my own lot size. I enter 1% on my trade calculator that is built into the TradingView website. And that position is then placed to scale to the account size. On Friday, I had 4 positions at 1% risk of 250. So that means I was only putting up 1,000 on the table, and my daily loss limit is 5%, which is 1,250. I also didn't place the last 2 positions on my USD CHF trade, which I will be breaking down in this video because I didn't break down the last. I did have the first trade on this pair at break even before I even placed the second 2 position. And then after that, I asked if there's any way I could talk to an expert. So they never even got me the expert. And then they went on to say, oh, basically this in a nutshell, they basically said, oh, we'll give you the 750. And that with regards to your query, please note that you'll receive an update from the relevant department shortly. So in my mind, I'm thinking, okay, they're going to get back to me about the situation. Never really got back to me. Took me a minute. So I was just curious if there's any updates on the lot size situation. So they said they audited my funded account and found the following verification criteria had been breached, which is, again, the consistency in the position size while trading. We can observe that your trade volumes fluctuate from a maximum of 6.89 lots to a minimum of 0.15 lots. Position size before and during major news events and or market closures. So again, I think Friday there was some USD news that did hit that was high impact. And in their mind, they saw that as hazardous to the account, or it could jeopardize their account, because when news spikes happen, you generally don't want to be in high impact news trades. But again, I had no idea because I don't focus on the news when I do trade, and nor did I think that the fundamentals as far as news would negatively impact my test based off when I'm getting in. Because again, a lot of times when we're trading these high time frames, there needs to be a large pool of money dumped or some type of major event happening for these large candles to make moves. This is why on High TF Mob, I teach mainly swinging, because when you do swing trade, you don't really have to focus on news. The news is really the fuel to what's going to fill in those puzzles that we're looking for every week. And I say puzzles, but really I'm just saying market structure. Okay, so right here, I go on to say, what I'm getting at is my lot sizes are automatically chosen based off how much room I'm giving my stop loss for 3-to-1 setups. On TradingView, some of my entries I knew were going to have little to no drawdown, which had tighter stops, but resulted in the trade calculator using a higher lot to ultimately keep the same risk of $250 for the potential return of $750. So if you look at all my losses, it was never more than 260. All my wins were a max of 750 or slightly more. So when I scaled into USD I had a tight stop after moving my stop on the initial order placed during the Asia session the night before, because I knew if I was stopped out, I'd only lose 1% for a return of 6%. That's why I'm confused on why I'm being penalized for using proper risk management. So I then send them an image, right? And this is the example, because again, I showed you guys this on Friday. These were the trades that allowed me to win. The news volatility poked in around right here, this huge spike, okay? So when I put this position in, you can see the stop loss was just shy under this low here, because again, I went down one frame lower to the 15-minute, and I knew because all the momentum was already being pushed and money was being dumped into these candles that we're going to get more bias going up. So I squeezed the stop loss. And of course, the calculator, if I put 1% with this amount of room, I'd always teach you guys, if I do a 1%, is this tight? Yes, I run the risk of getting stopped out, but at the same time, it's always going to be 1%. It's always going to be 250. And then that lot size will be higher so that it can at least get 750 within this space of movement, right? So this one was my first trade the night before. By the next morning, this was at break even. Then I placed this trade, which then went in my favor alongside this trade because I placed two more positions in. Both GU and USD were at risk free by then, by the time I put these two in. So I showed them an example of what it looks like when I place a position. So I put up the post of the image of what my boxes look like, how it's a 3-to-1 in the image. And then, as you can see there, and then right here, I sent them this. And they can zoom in and see. I put in 1%, I literally press buy or sell. So at that point, I'm not choosing a lot size, right? There is nothing on here really that, like the units would be the lot size. But again, I don't really know how to translate that over to know exactly what units is going to be what lot size on my platform. So in this case, everything is automated. And again, they hit me with the, I actually sent them this as well. I said, when I did my FTMO, I was granted my account and I passed in a very similar manner, but except after passing the grant, they granted me the funded account. That's why when you guys mentioned a guideline about lot sizes, I was super confused because it wasn't that I manually picked the lot sizes by choice unless I trade crypto, because the tool doesn't work for that. So like this weekend, Bitcoin, I traded this manually. Like I just set the position up, I took my sells and then made a bit of money off of that. So going back here, right, I basically tell them like, this is literally the same type of stuff that happened. So within a day, I made about $2,000 plus, just like I did with this test. And then my profit target was hit. I respected their max loss. I respected their daily loss limit for that day. And then this was the minimum trading days. Of course, it was literally almost identical, like literally almost identical. So this just honestly showed me more. So it just showed me the true colors about this firm, because in a way, like they need to honor the fact that I did pass and I did follow their guidelines to pass, regardless of how it happened. May it have been risky or whatever. You can't be promising that and then pull away on what people are going through. Because again, that took me about a month or so. So this was the bad news, right? Because the bad news ended up being that after I sent all that, they say, we trust this email finds you well. We have carefully analyzed your trading history and characteristics of your performance while trading. Based on our analysis, we regret to inform you. Basically the same shit, right? So I'm all right, whatever. It is what it is. I'm gonna let it go. And the reason why I say there's the good news, right? That's the bad news. The good news is that they gave me my 1,000, okay? They did give me my refund on the test, okay? So what I actually ended up doing was I bought I'm gonna show you guys on my social trader tools here, right? So what I ended up doing was I actually ended up buying a 50K test, okay, to basically start to compensate for the 25K. And I actually had a half off coupon code for the Osprey test. So I used the half off on the 50K to make it $200 because I put 212 down on the 25K and basically got a free test, right? So what I used for that now comes back. I put it down for a different test that's double the amount. And then now, once I did that, I had another 1,000 left over. So what I ended up doing with that was I actually opened up my own live account with their money at $250, right? So then I had 750 left for me to pocket. So I basically pocketed that, the rest of that, and then literally over the weekend trading Bitcoin, this went from 250 to 389. Okay. And not only that, before I even did finish my 25K test, I had started my 100K test. So once I passed the first part of my 25K test, I figured, all right, I'm already saving money to invest for another test. I might as well start the 100K now while I'm in the second part of my 25K. So that way, while I'm in the second part, I can be finishing other tests. So my cousin also invested in me, which is where another 50K account I'm working on. And the 100K that I already had put down on while finishing the 25K is actually almost done with the first part. So I literally need about $800 this week to finish, which is like 1%. That's it. So usually 3% on 100K is 3,000. So I'll need like one trade setup to pass this week to basically allow me to advance the second part. And then I'm just going to trade with better discipline this time around. So it's annoying because again, I had such great news for the channel. I was actually excited to start getting paid, but I wasn't too worried because again, I had another test working in the process. And at least now I know moving into this next test to be wary about how I'm approaching my trade setups and so on and so forth, right? So, all right, we're gonna get into the breakdown. I'm sorry for the ramble, but that's basically what my weekend of events. Again, I'm not really that bothered because I basically made the best of the situation while it was still something that could have been like pretty shitty. Because imagine I had done that, and then next thing you know, and mind you, I'm gonna clean up the charts, but imagine I had done that, and next thing you know, I did it on the 100K, and they tell me they're not gonna give me the account. That would have pissed me off. But at the end of the day, like everything worked out to where like I actually even ended up making money without really knowing that I was going to. So again, we're just going to delve right in. We're going to get into this weekly analysis. And now you guys know where I'm at in terms of trading. So we're going to go take another crack at it. I'm going to try it. And mind you, that 25K wasn't going to be the first and last test that I was going to do, by the way. So I will be doing a lot of different tests across the year with a bunch of different firms because I've gotten to a point where I actually understand what I'm doing. And I'm just going to basically keep trying to max out capital this year so that I could use it to invest in other things like stocks and actual assets. Because again, foreign exchange currency can't be used to buy everything in life. There's some places that just won't take it because this income is pretty much like, it's like money coming from thin air. So it's like, that's how companies see it. And they're like, okay, well, we can't trust it. It has to be coming from an asset, which would be like a stock pair or, like a Bitcoin or some type of crypto is also an asset. So yeah, we're gonna go ahead and mark these swing highs and lows real quick. We're about to get busy. So let's just get right into it. Again, that was the bad news. The good news, of course, is I still have my 100K almost done. I think honestly, just with today alone, I should be able to finish the 100K before going into next week. So that'll be super dope to be able to knock the test out. And honestly, the Bitcoin setup, that made me a good amount of money. Like I added on 100, I think like 130 onto my live account. I added on another like 500 onto all of the 50K. So my 50K started at 50K flat. It's at 50,393. My cousin's account went up another about four to 500 coming off last week. And then, yeah, I'm actually going to remove this last account here, but yeah, let me go back. Boom. We're going to go ahead and just clean up all the pairs. We're just going to knock all this out. And I woke up today, I was like, you know what? Let's just get right into it. I want to get my Sunday video up early so that way everybody can know what's going to happen here. What's the week going to be like? Again, this is just going to be another good week. I know all my weeks are going to be good weeks. I could find moves back to back. So again, whether you miss opportunities last week or you miss opportunities for the week before, there's always going to be opportunities. There's always going to be opportunities. There's nothing to rush when it comes to trading. Man, they really played me though. I should have it's funny because from the beginning of the week, I would have passed in a normal manner. At the end of the week, I just really wanted to finish the test by the end of the week. So I just find it very surprising. They're like, oh, you used too high of a side. I'm like, what? It's like calling a foul after the bucket was hit. Oh God, that's an N1. You need to give me the account. Stop playing. But that does look bad on their part as a business model because that's just weird to even do something like that to people. It's just like, and the funny part was they even told me, yo, like 2% of people pass it. So it's already a slim chance that someone's going to pass. And then you're going to basically dock them for the way they pass. That's crazy. That's blasphemy. So again, I'm not too fret about it. I'm just going to go ahead and if it means passing 2 to 3 more times to show them that I can do this, like, okay, so be it. At least I got paid for this week. So the amount that I was actually going to target using my 25K as far as for my first week payout was actually what I got paid in the bonus. So I was pretty happy about that regardless. So we got our swing high, which will be, we had this low that was wiped out. Okay, let's do something real quick. Sorry, I just froze up. So I'm just trying to like look at this. Sometimes it's hard to find your swing highs and lows because there's such big moves that created those swings. But it always helps to kind of backstep to where your previous low was, your previous high was, so that you know once whatever broke out here, this now becomes your swing low. It just clarifies it, makes it easy, and then you can tail it back up to find the previous high that respected the previous swing high that led to this low breaking, which is right here. So I just wanted to clarify before moving forward. I didn't want to have an inaccurate position there, or inaccurate support resistance, essentially. Swing high, we got our swing low down here. Boom, we'll delete all that. Okay. I'm just marking these, and that's about it for right now. I'm just gonna clean up all these charts. But yeah, this is gonna be a fire week because again, I already spotted setups that I was gonna use to pass my 25K if I didn't pass last Friday. So I was already ahead of the game regardless. Run all this. Get it out of here. Right, so we're gonna take all this off. All these buys could have passed me early. It is what it is. So again, like trading is a long game in this business. You're either gonna long-term swing and invest, or you're going to come in here, scalp and compound day to day. So it's all about your approach and how you want to trade, because trading is, I guess it's lucrative if you're well paced. You just got to have a good pacing. Let's go back. Knock all this out. Boom. Sorry I didn't clean this beforehand. I'm thinking it was just going to be a quick cleanup, but let's get all of our institution points into interest off. We got those. Okay. Yeah, we'll take this off. So UJ is looking wild, man. Might keep buying, honestly. Never know. All right. Boom. Okay, all charts are clean. We're gonna head over to AU. We're gonna get busy on that. But before actually we get into AU, let's get back to USD/CHF so I can show you guys the setup that I used to pass. Okay, so this was it. All right. Starting from the top down, we had the monthly. Okay. Let's take off the RSI right there. Mind you, I don't put on my indicators until after I break down everything, because I like to see the confluence of the information, of the raw information that I broke down. The raw information is the purest information. It's the fastest information. It's going to be the best information to go off of. It's naked price action. So here we were down here, right? And I knew the monthly candle had already started off. So basically starting on the first, we already started off with a sell. We'd already respected this low. By the time we were back up here, right? I'm down on the weekly, and in my head, I'm like, oh, I see what's happening here. This weekly candle still needs to fill all this, all these liquidity, basically all these positions that are left behind on this sell. So there's a lot of liquidity left on these sell down blocks. So for me, I was like, okay, let's see if we can dissect it. I come down to the daily, and all I see is candles just starting to buy up, buy up, buy up. So I'm like, oh, cool. Now I know if I drop to the 4 hour, I should see a consolidation zone that should let me get into the full move, right? And let me get into the high time frames. So sure enough, price was channeling here and building up, creating this ascending triangle kind of pattern, which eventually led to price breaking out of the previous high here, coming back to retest and throwing this wick. So I had already bought in the night previous into this candle because on the hourly, my confirmations were down there already, right? So here was our full bullish candle, okay? And this was our bullish engulfing that ate up this previous bearish candle from the swing low. With this amount of momentum, that told me that was a large, like, there's a large impulsive candle. So there's a lot of buyers in the market. So the buyer's incentive is going to be high moving forward. So for me, once price started to come back and had already tested at this low and started to look like it was going back up, I got back into the buy and I was like, okay, cool. I'm going to buy it here. I'm going to put my stop loss way down here because with this amount of momentum going towards the buy side, there should be no reason that we're coming back to wipe out this low. And this swing low, this previous swing low was respected to keep the trend up. So as soon as the price broke its previous high, I knew we were potentially gonna get another retest. I just didn't know how far we would come down against this single candle. So in the next morning, as price is moving in my favor, I had GU, which I already cleaned up that pair, making that sell down. And in my head, I seen this position here. I seen the consolidation on a 15-minute. Okay, so my position ended up, I'm gonna try to move it as best I can, ended up being this right here, okay? So I was like, all right, I can take two positions. Well, I took one first because I was like, once I take this one and it goes my way, the next time it comes back down again, I can take another position. And all I was doing in this moment was trying to stack positions so that what would end up happening is that as price is moving in my favor, I'm able to accumulate more in a shorter amount of movement. So these trades, right, with the consolidation zone showing up here and me already knowing we're coming down from a retest, I knew this was at least going to keep buying up a bit more. When it bottomed more, it shot up to right here, it came back down, and I was like, okay, let me do one more buy because I know where we're going, right? Once you know where you're going, you have more confluence and confidence and also scaling in the same setup, especially when you're dealing with high time frames. You can definitely get in as many times as you need to, but again, just make sure your risk to reward is proper. So by the time I even placed the second order, this is at its stop loss, this is at its break-even entry, and then this is where I scaled in, and then I was able to let it peak. And once it peaked within all three of these ranges, I closed everything out with enough to pass. Okay, so that was why there was this huge fluctuation where like I lost so much, but then I knew with that setup that was going to be a home run setup to be able to pass. So I was geeked. They had me fucked up. It is what it is. So we're going to move on now. And we're going to go back to, and again, I'm not done with this pair. This pair is also not done with itself. So I'm going to try to find moves this week to finish it out because we haven't even touched TP1 yet on this side. And I honestly only marked up the TPs to that side because in that moment, I knew where price was heading. So I'd already marked my weekly high, my weekly low. I marked my TP1, 2, and then my 3 was back up here. And then now, of course, I'm going to do it the other way just for the sake of my strategy and not having biases. Because again, the market can always go both ways, okay? So if price were to reverse, this would be my first take profit zone because this is where the first wick that was created that price really didn't come back to. And then we have a little bit lower would be down here, TP2. And then we have our TP3, which should probably be down here where price is left behind, okay? So real simple stuff, real straight to the point. And you could do this on any pair. So honestly, I was just skimming across to see what had good setups so I could finish my test. I wish now looking back, I wish I didn't rush it because it's kind of weird that in rushing it caused me to fail it. I don't know, I guess pass and fail. So we're going to go to our monthly on AU and we can see now I remember like a couple weeks back, we were at these lows. I was like, this could buy up before we actually get some push down. And I said, this could even buy up and then respect this low so that this actually continues up so that we can wipe out pools up here. But after this past week and how the sells popped off and what the weekly candle looks like, or the weekly charts look like, to me, it comes off as we may be actually continuing the structure and pattern to finish it down to these lower wicks. So this week will tell all, and I'm going to break it down so you guys can see it. So I just got a phone call, but I'm gonna call back. But right here, we're still at our TP1. We know if we break this level, we'll be looking to go down to our TP2 zone. So within that daily candle, we're also coming from this peak high here. So we'll go down to our 4 hours and down to our 1 hour. And I'm not gonna lie to y'all, this is just kind of one of them blatant setups, right? So it's like, we know our swing high is here, we know our swing low is here, we see price building up here. So this is the best time to look to our left, because now it can mean that we have institutions coming at liquidity on the left side that was left behind. So again, whenever I find liquidity pools to the left, I always like to look for those really minute double bottoms and double tops, because what tends to happen is price will generally have a range and institutions will come back to collect the money left behind. So here you go, liquidity top. Same thing here. Okay, so anywhere price went sideways for a brief period of time, it's a great zone to trap, because chances are they're going to come hit the bottoms. They're going to come hit the bottoms over here, these little areas, right? Because there's still wicks. Okay, this price was pushed up and never really came back. Okay, so they're going to come back. If you were to target anything coming down from this side, it would look something like this, where if you're going to swing, you could take it all the way down, have a really wide stop, be disciplined, or you can tighten it according to what you see on your current side, and then aim for these levels. Okay, so we'll move that real quick. Take that off, take this off. Okay, we got another one about down here, right? So you could just see how aggressive price moved up in the past like couple weeks. Let's see. So that's also another dead giveaway that we may actually just be coming right back down to wipe out all these pools left behind. A lot of buyers made good money. Okay, so same deal here. Okay, so this is just marks for money left behind. Okay, again, you can just see the zones I'm really focal about every time I make these lines is 1 tap, 2 tap. They don't have to be perfect. 2 tap, 1 tap, 2 tap, and then you'll notice price was just moving sideways right before it broke out. Finally made another sideways situation before it broke out, right? So 1 tap, 2 tap, 1 tap, 2 tap, right? So double tops, double bottoms within a little range will generally give away a pool of money left behind. Okay, so now on this current side, if I'm looking at this, I'm going to trap this because this is build up, it's consolidation. And I guess the best analogy I love to give when it comes to consolidation, I just think of like a cloud before the rain. Like you get those big gray clouds. That's basically what these little consolidation pools are. It's just a cloud right before the rain. So based off where it's building up and where it starts leaning towards, that's usually where the rain will fall or rise, one of the two. Okay. So I'm going to keep this real simple. I don't really got to do too much with this. I think we can kind of just see the natural direction of the market. A lot of what I'll be doing is using, again, the daily candles, the 4-hour time frame to time the entries into this, what looks to be a bearish sell down for the next couple of days, if we're going to be realistic. But I won't know until the next candle opens, shows me the fake move, and then shows me the direction it wants to go. So we'll wait on that. This is also kind of in the same boat. So we'll start from the monthly. This is in the same boat in the essence that it also has room to the downside, but also has room to the upside, where if we respect this low, price could reject, right? But if it breaks through, we know we're coming down for this wick. This is where buyers, you got to think somebody bought back here and price had never ever came back. Okay, so they bought up and then made that much money. So price could come test the low again and then wipe out, rise up, or they can come down for these guys. It just, again, all depends. So we'll go down to our weekly. We do see weekly is bearish. Okay. And remember that signal I saw from the top of the week last week? I was like, "Ooh, okay, we had a nice little weekly." Sure enough, all that consolidation that was throwing me off in the beginning of the week was literally just this tail. Okay, so this is again why, like I say, the markets are like a Russian doll. So all that tail, like the whole tail of that weekly, was just this build up here, and I'm pretty sure this was already there at the start of the week. So we had 1, 2, 3 days of price rising and then starting the fall before really telling us like we're going down. Okay, so that's also a good marker for people to know, like it takes about 3 days before the weekly candle starts to actually print itself outwards too, right? So it's like 1, 2, 3 days, and then finally the last 4 days were just bearish. Okay, so we know now a lot of times a couple of days, 1 2 to 3 days could be bearish, or 1 2 to 3 days could be bullish before buying up, just to end out a bearish leading into buying at the end of the week. So you could have a week that pops off with an immediate sell, and then you're gonna get some fake movement or some reversal movement at the end of the week. Or you could start with the reversal movement at the beginning of the week and then get into the real move going into the end of the week. Okay, so let's see. This is going to be very similar to AU, and I knew these pairs weren't going to take me long to break down. So as far as just like what's already printed, because there isn't a lot of there isn't a lot to really go over in this like week, to be honest, because all those big impulsive moves happen. The one thing I can say though is just be wary that after moves like this happen, you'll get a lot of rest time, kind of like back up here. We just had so much rest time for 3 days, right? And then finally we got the next impulse. So whenever those big moves happen, just know there's nothing to rush back into, and just try to be calculated about your next time getting in. The markets, they'll feel like it's running from you only if you feel like you're chasing after the market. You should never really chase. If you miss a move, you miss a move. We'll go back up to the down to the hour here. Okay, so we know we already wiped out this pool down here. We do know there's another pool down here that they could come collect, but we also know we're very, very oversold. So if I go back to the 15-minute, what I will do is keep it simple and trap this liquidity down here. I don't know what my cat's over here singing. I don't know if y'all can hear that. Singing. Malcolm, what you doing, bro? Yeah. You want to say hi to YouTube, huh? Tell hi TF was good. All right, boom. Let's go back to the hourly real quick. So again, price is mad oversold. There's a high possibility we're gonna get buys at the beginning of this week. He came here on my lap like I'm not working or something. What's up, bro? All right, so yeah, this could be buying back up, and then we may get the sell downs in the middle of the week this week. And you just gotta keep in mind, use that 4 hour to really time everything. So this, like, what I like to do with the 4 hour is I like to see a bit of build up before I feel like it's going to go one way. And I'm going to show you what I mean. Okay. I'm just going to kind of highlight it. Usually you get build up like this. Okay. And this is a lot of time. Like it looks like a couple candles, but this is a lot of time before the price decides to pivot any one way. My boy jumped into my lap. What's up, man? All right. Now you're not going to do this. No, you're not doing that. All right. Okay, so boom. Right, so just a little bit of buildup of price going sideways on the 4 hour. That's what I mean by buildup. Because what will tend to happen is if you go on the 1 hour, it means the 1 hour is consolidating for about anywhere from 8 to 12 hours. So we'll go back real quick and I'm going to show you what I mean by that. So let's count the candles. And just right here, 1, 2, 3, 4, right? So that's already 16 hours of wait time. In 16 hours of wait time, price was going sideways and we were coming off of a strong buy. If it's going sideways for 16 hours, the chances are price is already ready to go the other way. Same deal down here. If I count the 4 hour candles, Be the same ordeal. 1, 2, 3, and then we'll say about 3 right here. So 12 hours, about 12 hours, price is going sideways before price finally shot up the other direction. So when price is coming bearish and we seen price kind of retest here, and then we seen it try to come down, it couldn't break it. And that span of time, that's a long duration of time for price to be moving sideways. So generally it's an insinuation that either it's going to keep going sideways longer, or it's probably ready to reverse within the smaller frame. So a lot of pivots that you'll find on like your 1 hour and stuff can be found a lot easier by just using the 4 hour behavior, right? So this is what I would call a behavior. Like the 4 hours behaving a certain way, that's giving away a signal on what should happen on the lower time frame. This is the same way we use the daily, the weekly, all of that to really understand that, like, for example, all of this consolidation here, all of this movement sideways, this is a ton of candles on the 4 hour. Like this is a lot of time, like a lot of time. So if you have that much movement sideways on the 4 hour, that generally means something's happening with the daily that is going to pop off. So that's how I would ideally use market behavior to know what's going to happen. This is why taking your time, stepping away from the charts and coming back periodically will do you justice, because there are times you can fall in the traps on the small frames. There's times you can fall in the traps on the larger frames, which will look more like this. So you'll find that you're buying here, you're selling here, you're buying here, you're selling here, you're buying here, you're selling here, and you're constantly on the wrong side. So it's not until towards the end of all that sideways movement that you're like, damn, okay, clearly it was just consolidation and it was for a higher frame. So using that 4 hour on the lower as like the midpoint helps you kind of be more sharp about noticing the pivots. So this is build up to then reverse, build up to then reverse. And the way you would know it's finally going to reverse, again, we look for that break of structure on the low frame to enter. So once you had price moving sideways for said 16 hours up here, price finally broke out of structure with the candle right here, and then shot down, came back up and tested that same zone, but never broke its previous high. So it's a break of structure and it's a valid sell down. And most people would have aimed down for these wicks, but price only got so far because it was ranging on a higher frame. So let's move on to AU. Actually, a couple more things. Let's go back on AU real quick. There's one more thing I want to do. I'm going to put my daily opens up. So I like to just leave the line there at the 0. So that way, whatever candle opens at that time, I know that's going to be for the daily open. And then the behavior that comes off of that tells me what the daily candle itself should be doing. So we'll do that again. I don't do it all the time, but it does help for like a start of the week. It does help for maybe the start like Monday, Tuesday, sometimes even Sunday, depends. So, all right, next thing we got AJ here. Go back up. All right, so AJ, I'm not gonna lie to you. I think we're gonna keep buying. I think it's gonna keep going up. I think we're gonna come up for these for this TP3 zone, because this looks all bullish. It looks like we've already had our test down to these lows. And it also looks like there's just a lot of liquidity left up here that they actually want to go for. So right now, in the meantime, it has been selling within that last, towards the end of that last week. But this next weekly candle, I want to see, it might start off with the sell. We might get a test down at this low, and then we might actually see some break of structure that leads to us buying back into this wick. So I might actually even use this to pass this week as well, depending on if I can find that entry for that pullback, which would be somewhere around down here, which would also be this tail right here. Okay, so we'll see what's up. We'll see what's up. But in the meantime, looks like we've already hit 1 take profit here, 2 take profits here, and then we're on our way to the third now. So if we're gonna get a retest, let's go down to the 4 hour. Sorry about the phone calls. Hold on. I'm not gonna lie here. I'll actually make some adjustments, because if I'm looking at this, right, there is a new low. All right, we have a new weekly low. It was down here. Our new weekly low is down here. Okay. And again, the reason why I'm marking this as the weekly low and now this Oh, hold up a sec. So this is 87. Remember, I like to keep them near bank levels whenever I move my weekly targets. So 87 would be here. So 87, 250 is going to be the area I do. So that's like a quarter level, right? And the quarter, 25 cents, quarter level, 250. Okay. It could be 75. That's another quarter level. Let's see here. So we have our current high, which is up here. Bro, you're doing too much, man. Doing too much, my guy. You got to wait. He's over here trying to hop on my lap while I'm working. Hold on now. Hold on, Chief. Yeah, ITF. I got cat named Malcolm. He's the homie, though. He is. He's more like a puppy than anything. The breed is Bombay. So if y'all know anything about Bombay cats, you know the vibes. You know how they get down. So our peak right now is near our next bank flat, which is 97. The adjustments I'll make on the daily because we've hit a couple targets. I personally don't like to move my daily TPs until all of them have been hit going one way. Then I do the reset. But in this case, this got really close to TP3, and I'm sure there's more room, right? So it would make sense to make the relative adjustments. So on the upside, my TP1 now is going to be like up here. Because again, we kind of want to keep price trapped so that we can decipher what's going on at all times. Once you have these lines marked, this is your map, this is your outline, right? So my first TP coming from here is going to be here. My second TP coming from down there would be probably this level way over here. Not even probably, it would be this level here. Because you can see there's a wick there that led to price being pushed down, and we have not got back there yet. So looks like we're coming back for that money that was left back up here. So somebody sold here. That's just how you have to visualize. Somebody sold there. We got to come back and get them. So TP3, you could do that zone, or if you wanted to give it more room, knowing that you have these peak highs up here, you could always do this. So that way, once you break TP2, you know you got a whole new sandbox to play with up top. Because this is between TP1 and TP2, those are really close. So I might move TP2 right here. Okay. So again, you want to give them a little bit of room between one another so that when price gets into those zones, you know, you can still have kind of a clear target. So this is my new TP1 on the upside. So now I'm to the downside. This is my TP1. My TP2 to the downside would be down here. Okay, because price bought up, came down, tested. Once it got out of here, it never came back. Then my TP3, I'm going to mark where my target, my daily or weekly target's at. So now if we come back down here, I know the weekly wants to essentially break the level to start pivoting and go down. Okay, so now you can see the candles trapped. We're all good there. A little bit on the daily. We know where we're going with both sides. Then we go down to our 4 hour. And now we can start dissecting all the candles. So this is where we'll use to find our entry. If it's me, I always like to look to the left to mark my targets or my liquidity pools. Because again, we're always targeting money left behind. Cool. So, so this is a good example of like, sometimes you're not going to get that pretty double bottom to mark your low liquidity line, but just being logical here, like it went sideways after this double top. You had this one pin down here that was never touched. So we know if price were to come back and wipe this out, we're going to try to keep going lower. So again, you can always just keep marking, right? And sometimes if it's not as clear, you can always drop to your 1 hour and then it becomes very crystal clear of where your zones are. So these are all liquidity zones left behind. Keep in mind, I still expect price to come around here, but respect, and then we'll get some buys. So we'll see. It's why Sunday is usually not the ideal day to trade unless you have a very obvious setup. Also, I forgot in that last video, I did say on AU that I didn't mess with it at the beginning of the week, and I sure did. I remember I sold and it went against me. So I did take a 1% hit right away on that Sunday. So it happens. It definitely happens. But again, I was able to come back by the end of the week and just, you know, trade with proper risk. Liquidity top, boom. Okay. And then we'll have targets also appear way to the far left. So with those on the far left, I'm not gonna lie, when it comes to price being this far back, yeah, you could do your liquidity zones and go down to your 4 hours, your 1 hours, and do that the whole shebang. But what will happen is like the hourly chart it doesn't work well. Sometimes they don't really show you what's printed back here, that what stuff dated this far back. So sometimes there's a cutoff where like, look, I can't even get back to those peak highs, so I wouldn't even be able to see the liquidity, right? So this is where I would personally, if it's me, I know if on the hour, like I can't even go that far back to see these, this means that that's some money that they really might actually have to go grab. Like there's a high possibility once we're going that way, they're gonna go get it. So regardless, you can use maybe the daily to do that, or you can just know that, all right, these are, again, use your markers, your TP2, your TP3 to know that you've already hit the wicks, right? So you don't even have to really use the hour at that point. So at this point here, this looks like a very large pattern. This looks like it might come down one more time here. And if it breaks this one more time to here, and then we'll probably get some setup going back up. But now this does look vicious for a nice sell. So we'll see. And if anything, that looks like a high test. So let's go back down to the hour. We're going to find our swing highs and our swing lows to identify everything. We got our swing high right here because this was the high that led to this peak low breaking right here. And then it created this new low down here. Now it created this low. Price came back and then wiped that out. So again, you can mark this as your new swing high. Okay. So now we know we have price trapped here. You could also, in context of the past, right? We had a high here that was wiped out from this low. This could be your swing low, and this could also be your swing high. Right? So this is relative to the past, relative to current time, current speed. This would be your swing high. This would be your swing low. But if you're looking, again, if you want to like make sure you're in line with the high frames, this is what would make sense. Hold on, let's go back up real quick. Swing high, swing low. Okay. Right? Because the reason why I'm saying that, again, I remember bringing this up in a previous video, is that what's happening with this, right, is we had our swing high that came, wiped out this high, right? Or a swing low that came to wipe out this high. And then price came and set this peak where price never came back to this, which caused this to happen. Now we're headed back towards this swing low. And what's happening with all this on the way back is internally the structure is breaking, right? So within the swing high and swing low, the structure keeps breaking. So yes, you would ultimately be saying that all of this is internal breaker structure, which has nothing to do with your anchor points. But if you want to trade relative to the current time and you want to keep up with what's happening, keep up to speed, you can make the same, essentially you can call them mini swing highs and mini swing lows, but your true anchor points to move the market would be up here and down here. And a lot of that is going to, again, correlate with your high frames. So let's go back to our daily, right? It's going to correlate with your high frames, right? So again, your swing low is down here, your swing high ended up being up here. So that's why all of this happening is internal breaks your structure. But again, if you want to keep up with everything to a detail, that was a big reason why I would always use liquidity lines to do that. So here's what you'll do. So most times you'll find that your swing high and swing lows do match with your daily, which again is why you would be able to spot your breaks of structure a little easier. So we got the bottom here, top here, right? So yeah, don't get mixed up. It's hard not to, but again, I always like to look to my left to really help identify my swing highs and lows, because it, in my mind, I look at it as like, well, so what made all of this happen, right? And if you trail it back, you find the pinpoint that made it happen and where they wiped out to create a new swing high, or vice versa, right? So at this point, all this is just liquidity, and then we'll know we can still play off the liquidity lines, because as long as you know how to read price, you'll be good. But um, patience is key. So a lot of times what happens is when you have the swing low, you'll generally find your point of interest, which is the mark that led to wiping out your high. So it's this, right? So this is my point of interest. This was the last down candle before the up move that wiped out this high. So this is why you kind of get this reaction happening here with this wick. So let's go ahead, derealize block. Yep. And then we'll just wait that out for the week. So based off how price wants to play, if price plays by going lower and breaks through this, then we can look to probably sell it down to the swing low. If it respects the swing low, we can expect that somehow, some way, the 4 hour is building up and the daily is also confirming that buy setup to continue. So at another, like probably another day, we'll probably show a bullish engulfing, and then we'll know we're going up. Kind of like with USD CHF back here. If you saw, like right here, you had this bullish engulfing, price was bottoming out, and then you had the bullish engulfing, which led to the buy up. So that type of behavior could happen, but it's a matter of time. So that was AJ. So we'll go down to GJ. GJ was kind of in the same boat as AJ. We can see the monthly. Personally, again, for me, I think AJ and GJ are still going to be buys. This month isn't done yet. We're still in the 12th of this month. And so far with what it's done, it opened up, it shot up. It's now in the middle of the month. We're back down to a pullback. And we're either going to continue back up in the next month's candle or finish off bullish by the end of this month. So again, to decipher everything, we drop down, go down, and we see here, this is really nice for still a bullish continuation. Our weekly low is now, let's see, we can make this adjustment here. So we have our weekly low here, which is at 156 flat. Boom. And we have our peak highs here with the 168 flat, but let's do 169 as our zone. So 168, you can see 168's here, 169's here. Price is peaked right about here, which is closer to 169, which to me gives away that this might be our reactionary level, because the sells popped off around this zone or a little closer to this zone. It wouldn't have ideally broke past 168. Okay, so we had a strong reaction there, which means they're probably coming to collect bread that they left behind here, because this was a massive buy. Like between UJ, AJ, and GJ, all these buys are abnormal buys, and those are high time frame buys. So again, we'll go down to daily. We can adjust our lines after we did that, because these are kind of going to be shifted. So we have our TP1 down here. We have our TP2, which is down here. And again, I like to keep these dailies relevant to current time, because you want to keep price constantly trapped alongside your high frames. Because like, for example, like how long this would take, maybe 4 weeks, I won't say 4 weeks. There's no telling, right? Because you could always have strong impulsive candles, and in like 3-4 days, you're down here. So it's just a lot of room, and the more room you're giving it, the more time it's going to take for your trade to play out. So if you want to minimize the amount of time you'll be dealing with a pair, try to squeeze in a lot of your lines and keep them relative to the institutional levels. So I'm going to do the TP2 here. and then TP3 right here. Now, okay. So if we were to break through this, then I feel like it'd be safe to say we're gonna try, and you could use other wicks within this, but again, I kind of like to sectionalize it and pick out the more obvious wicks. So this is super obvious. This is really obvious. And this is really obvious that institutions got involved. And then to the upside, same deal. So TP1 is now going to be, since we're here with price, I'm going to trail back up to this. So this is our more current TP1. Should be right here. Okay. So now we'll know when we're turning back up to that. And then we'll keep those the same. Because again, I still do believe over time, GJ is going to get up here just the same way UJ was able to get up to its peak highs. Like so, right? So now we'll drop to our 4 hour. You know, we got our peak high, peak low. We're on to our 1 hour here. Let's see, boom. Okay. So we had a low here. We had a high up here. So this high caused this low to get wiped out. So this is our swing high, which led to this swing low. So again, everything, if you can keep it more current, it's better. You can use the past to help too. So boom. And we got our peak high here that once price got up here, swing high, this was a high that we just never came back to, and it caused the wipeout of this low. Okay. Or if you want to be past technical about everything, you can say this was your swing high, or this was your swing low, your swing high was way up here. So personally for me, I'm going to keep it relevant with this because I do want to find that buy opportunity. And we're going to go ahead and mark all of our liquidity zones. I'm just going to do all the lines right away. Just make it a little quicker. Okay, so here's a little situation where like sometimes I'll angle them. I'll angle the moves because it's just it's usually like a descending channel here, or a descending triangle. So sometimes you get ascending triangles where it's like you have an angle going like this, and then price is trapped within it. And when it's trapped, it's just building up to break out one side. So the way we'll know it's going to go out the top side is when the lows keep respecting, but the highs are kind of just squeezing more. They're kind of close, and the lows are just getting higher and higher, and then it'll just pop through, right? So in this case, it was kind of the same deal. You know, you kept getting your lower highs moving into price, and then broke through. Okay. So that's times that I'll kind of angle it. You don't always have to. If you wanted to, you could have gone. If you still like the horizontal theory, the sandwich theory that I go by, which is just simply marking the last two lows or maybe that one wick, you could do that too, but it just looks a little bit more weird in this case, right? It's a lot of room, so, right? So you could do that. It's up to you, trader's preference. What you see better is what you should go with, though. This is always my opinion. Okay, so yeah, you would have been able to still spot this sell right here, knowing they respected that previous high, and then that this was the breakthrough. You could have found your entry on the 5 minute, knowing that they were still respecting your trend. So let's go back up. 15 minute. We're down here with it. Okay. So yeah, I don't think I'm gonna really rush into anything this week because there's nothing really blatant for me to be like, oh, yo, this is it. This is the time. Again, I like to usually wait for the high time frame to line up with something on a low frame. And that's when I take initiative on anything because I like to use patience to make me money. So I like to just wait. We know, again, we would just dissect our 4 hours. So when the market opens, we'll pay attention to what the 4 hour candle's behavior is and how they're closing at each 4 hour time. So we'll open at 4. We'll get our whole new daily candle, which will generally start off with a fake move. So the next daily could start up going up with the buy. The 4 hour might line up some bullish engulfing candle right here where it'll insinuate that we're going to buy up and collect some pools on our low 1 hour frame. And then depending on what highs we respect as we're moving up is what's going to determine whether we're going to come back to that swing low or not. And then that's when we'll use that new daily candle to see whether it will try to break through and go down lower to this TP1. So again, we're in a buy candle for this week, or at least coming off the previous week. And this next week could start off by, again, that little bit of a buy, the sell down, the test, and then a quick buy up. Or it could, it could literally just start up selling off and then immediately move up within the middle of the week. So it's all depending upon time and what's happening between buyers and sellers across time, right? So now we'll go down here. UJ. Oh my God, this was fascinating to me. I ain't gonna lie. I thought this was actually gonna come down. And remember, I always keep bringing this up. I told you guys before, there is price still left back up on this side. On this broker, it's just not coming up for some reason. Other brokers, you will see that price is still left off up here. So what I ended up doing was using flat levels to gauge how high it could go. And the peak that I had my TP3 at was 134. So now what I'm gonna do is move it up to 136. Okay, I'll move it up to 136. I'm gonna move this TP2 to 134. This is just kind of like a spur of the moment. We just gotta kind of improvise because this is not something that generally happens with markets, as far as it just buying this long and never ever pulling back. And the way it looks like we even have a double bullish, like a double buying candle for the month. So the way this candle ends for this month is going to be interesting because that'll really set up for what's happening going into the following month. So I don't know. I've never seen a double buy monthly candle like this. That's a lot of buying momentum. So this next week, we could get some type of pullback, or we can honestly just keep going up. You just don't know. But this is why it's good to look at the DXY as well, because the DXY is a chart solely for one currency. So the US dollar does look like it's supposed to buy up pretty crazy for the next couple months. Okay, there's a lot of money left back here. And if we know the US dollar strength is going to keep increasing like this, we can keep finding opportunities every time it dips to get into pairs such as USD/JPY that we can buy into with knowing that it's going to get stronger. And also, if I look at the Japanese currency, it's been tanking. So this is a big reason why those buys with AU, GJ, UJ, all those buys were popping off because you had JXY going down in its strength. Okay, so we already wiped through our lowest weekly target, and looking to my left, I got nothing to deal with there. So it's not until I start reading the candles as buys on the JXY that I could start saying that, yeah, we're going to see some strength. But in the meantime, it's looking brim. It's looking real brim. So Australian dollar right here, this is looking like it's getting weaker as well. And if that's getting weaker and the US dollar is getting stronger, that could only mean that this right here is going to actually be selling down. So let's go, because again, US dollar goes up in strength, AUD goes down in strength. This is a tank, okay? So I think my setups for the week will ideally be, they're going to mainly be like GU, AU. I don't know that I'm going to mess with UJ that much because again, this is just in a weird position that I personally wouldn't really put up with this pair like that much. because this is in a situation where you don't know how much higher or lower it can really go. So using the candle signals will be the most important thing that you can do. So here we will readjust our weekly target because again, our peak high is now in a totally different area. It looks like 134,500 will be that new weekly target. I think what I'm actually going to do with TP1s through 3 is I'm going to move this up. Hold on. It's up to like 1.34 for the TP1. We'll do 1.36 for the TP2. Let's see which one is this one. It is what it is. We'll do 136 for TP2, and then we'll do 138 for TP3. So that way, at least I have some space to deal with. Again, as long as you have lines up there, you can always read the candles through and through to know what's happening. So candlesticks, learn candlesticks, and my strategy will pay you. That's just how it works. TP1, TP2. So we have our TP1. This is going to stay the same on this side. Our weekly low to me now would have to be, again, I like to trap from the low to the high because again, this was just so much room that I had to give that type of space for my weekly target. Ideally, yes, my weekly targets are this confined. This is more of a regular weekly target line for me. Okay, so in this space, what price is the line near? Well, if I'm looking at it, just spread it a little bit so I can get some flat values. 126,500 is what it looks like. So that's a mid-level right there. Okay. If we're gonna be good about the zone, again, I like to generally have my weekly target on bank flats. So 126 flat here, it won't hurt either. Sure, it may be a little bit of room, but again, these lines that I put up as weekly targets aren't really just lines. I personally visualize them as an entire zone, just like this. Okay. So as much as we want to be like, oh, at this exact price, and I'll use, you see, so like the flat will be in the middle of the zone. And this is how I literally visualize my weekly targets. So I would just, if I wanted to put this up here, then y'all could just see. So that's when I'm visualizing. I keep it as a line, so it's just neat. So everything's just crystal clear. So if I see the tail coming off, I know exactly where we're going. Again, we'll drop down to the daily. Daily looks like it's still buying heavy. Personally, I'm going to shift my line. So we got our TP1 here. Oof, so weird, so weird. Maybe we could draw this back more, and we'll just go down to here. So TP1 there, we'll do TP2 over here. And then our third take profit will be down right here. Boom. Okay. So if it's me, right, and I'm looking at this looks like buildup, right? So remember I was telling you guys about earlier, price on the 4-hour moving sideways, it's just buildup. So that to me is a liquidity pool. And especially when you have buildup on a 4-hour like this, chances of the daily moving after a breakout are a lot higher because the 4-hour takes a lot of time to be printing these candles. So that's 1, 2, 3, 4, 5. That's already 20 hours right there. 6, 7, 8, 9, 10, 11. Well, 10. That's 40 hours. 11, 12, 13, 14. So shoot, what, like 56 hours of price just going sideways like this? It's a lot of times, like a couple of days almost. So it's a huge channel, huge liquidity pool right here. And I think what we'll probably get is a false breakout. So the next daily might buy, throw a spike, and then come back, or we'll literally buy and just keep going. Because again, this momentum, I've never seen this before. This is actually the first time I've seen 2 bullish candles side by side, especially one previous having a wick like this. That's a lot of buying power. So we'll see what the vibes are. But that'll wrap up the video for the week. Again, I'm glad I was at least able to show you guys the transparency coming off the trades for last week, show you guys what ended up happening with my test. And again, I'm still looking forward to this week as being a good week because the accounts are all ready. Everything's all set up. I'm here for it. But thank you guys for coming along with this journey. I'm sorry for this video being a lot longer than some of the others. There was just more content. I will eventually try to work on like cutting and editing the videos. But in the meantime, I've just been mainly focused on like work and different things. So when I find downtime for that, I'll definitely start updating that type of stuff. So my videos are more concise for the weekly breakdowns. So I'm just trying to fill out the system. And again, you guys' feedback will do me wonders. So always feel free to let me know what I can improve, what I could change, and I'll definitely be willing to look into that. So please like, share, show this video to anybody that you feel like doesn't believe it, can definitely watch this channel from the beginning and just kind of see how things play out. So from there, I hope you guys have a great day and peace out.